refer back to my time as a student. I remember being in an MBA, in my MBA, and going into the course that was probably the most popular course in the whole MBA, which was the Advanced Corporate Finance. And I remember very well the first session, the first 5 minutes of the class. It was a very popular course, it was a busy course, we were all very keen to learn. And the professor stand up and said, "If you like answers, get out of my class. If you like certainty, get out of my class. I only provide questions." And for me, it was a very important point where I realized that what's important is asking the right question. I started as an investment banker. I was working in Europe at Lazard Frères and working in sort of equity capital markets. And at the time, there was a whole series of privatization. So we were involved with the government or with issuers in doing those privatizations. What's really fascinating, it's a very integrative discipline. It brings a whole lot of different areas. So either you're in venture capital or in private equity, which are quite different. You need to bring in some skills in sales, in psychology, in finance, of course, in product management, in human resources. It's a very integrative discipline that brings a lot of different knowledge from different areas. So that's quite interesting. Australia is one of the largest pool of capital in the world, and that's mostly linked to the super fund industry. We've got a sort of very sophisticated, very large super fund industry that effectively provide a lot of that capital that is being used to invest in buyout or in venture capital. So it's a very important feature of the Australian market, that sort of large pool of capital. The private equity industry is two very distinctive parts. The first part is the venture capital industry, which is dealing with early stage companies, high risk companies. And then there is the other part, which is also part of private equity, which I would call the buyout, right? Which is larger company, more mature. Those two parts of the industry have quite different dynamics. There are very good venture capital funds in Australia who who are very professional, who have very good results and returns. And there has been a tremendous role being by the successful startups that were born in Australia. Atlassian, Canva have shown to the world that you can create a really successful global company from down under. So the vision and the practice of venture capital has changed radically over the last 20 years and even over the last 10 years. So that's the venture capital part. The buyout part is quite different. It's quite mature. It's been mature for quite a while. It's a lot more stable, and probably it has less change over the last 10 years than the venture capital industry. In my class, because it's a sort of an elective, so typically the students take my class after they've taken the fundamental courses. We try to release some of the assumptions that are fundamental in some of the earlier classes. So, for example, the assumption of efficiency. We talk about the market are efficient. In the fundamental courses, we do a lot of work assuming the market are efficient. In my class, what we do is we release that assumption and say, actually, the market under certain circumstances, and certainly in private capital, are not efficient. What does it mean? What are the implications? And it's almost giving an opportunity for the students to unlearn what they learned before and get a little bit more to the real world, not criticizing what you learn in the first couple of years of your master, but just connecting with the real world and saying some of the assumptions that you learn in those courses is not always correct. I use a lot of my class almost as an alibi. It's great to learn about venture capital and private equity, but it's even better to learn about the fundamental concept in finance.